Hello, everybody. Welcome to the Monday live stream. There's a lot of things to go over for this one, so let's just jump right into it. First of all, just like the title and the thumbnail suggests, we're going to do a price prediction. Now, this is a little bit odd because I feel, and I believe wholeheartedly, that price predictions are pretty much worthless. They're worthless because people just give you these numbers and they try to make the best educated guess that they possibly can. Sometimes it works out, but 99% of the time it does not. But the big thing is with the price predictions, first of all, it's entertaining. Let's just say what it is. It's entertaining and it's fun. Don't take it with like the absolute gospel. And also, because I believe wholeheartedly that we're going to see a massive, massive downturn, maybe another 48% or so, this is good to talk about what to do if this price predictions get even close to what I'm talking about. So before we get into it, there is a link in the description, and it is where I have the crypto critical videos. One of those I talk about how everyone was wrong for Bitcoin price predictions. And there was a whole plethora of people that I had in there. Max Kaiser, Noel Powell, Mike Novogratz, and I even had me. And I was the biggest offender of being wrong with, of course, price predictions. So take this with a grain of salt. But I think the more important thing is how to handle things if things go down from here. And we actually see a reduction from 69K. First of all, let's go back. Let's see where we were at to where we're going to and how things are kind of repeating constantly. I know some people will say, but Rob, the super cycle. And I get you. I mean, it could happen. I mean, it hasn't happened yet, but people still, that doesn't stop anybody from talking about it. Then, of course, business cycles. That's going to happen. Okay, well, I mean, it could. I mean, 4-year cycles seem to be playing out just fine. And like me and Jerry talked about yesterday, 4-year cycles for Bitcoin playing out pretty well. And 4-year cycles for presidential elections also playing out very well. And of course, midterm elections like we are in right now, that is one of the worst times for traditional markets and for our crypto market. But let's go back. What I want to take a look at is all-time high to all-time high, all-time low to all-time high, all-time high to all-time low. And what this means is when we topped out for Bitcoin, especially after the halving. Now you can go back to 2011 and see that it actually topped out at $32. June 9, 2011, Bitcoin topped out at $32 from its inception of 2009, when it was actually first put out after the white paper, Satoshi Nakamoto. And when you went from $32 in 2011, and then you had the very first halving, and that's where we pretty much base everything on, the halving. Then we get an all-time high, which we did in 2013, November 29, 2013 to be exact. And then we have a dip, a reset, and then we do it all again. A halving, all-time high, dip, reset, halving, all-time high, dip. It just keeps repeating so far. So for this one, if you go all the way back to 2011, before the first halving, you actually did a 40x. Why am I talking about how much you're making? It's going to be important in a little bit. Actually, there's 2 reasons. One, it's about these 40x's and these 16x's and how much it's gone. And we take a look at that to what you can potentially expect. Remember, there is this thing called diminishing returns. And then to see like, well, why would it crash, 90%, 70%, 30%, or whatever else that we're going to talk about? The reason why is because it's happened before, and it doesn't really matter how much you go up. I'll get to that in a second. So you went from $32 to $12.40, that's a 40x. Then, of course, this is the all-time high to the next all-time high. You went from $1,242, and in 2017, which took 1,477 days, you almost hit 20,000, which was roughly a 16x. Very nice. Everybody's happy so far. Now, these people here would have laughed at you when you said, I'm up 16x. Like, rookie, I got in when Bitcoin was $1 or when it was $32 or whatever it was. They're laughing at us at these different things over here. But that's okay because there are gains to be made. So then we go from 2017 to 2021, specifically December 15th, November 8th. And it took 1,424 days, almost the same between 2013 and 2017. And we did a 3.4x. Now, again, this is all-time high to all-time high. Me personally, this is not where I like to buy Bitcoin. I don't like to buy it when it's at its all-time high. I know some of you will say, well, I did that. Don't worry, I did too in 2017. It's all right. We learned from that. And it was a 16x. Now we go from 2017 to 2021, 3.4x. And from 2021 to 2025, which took, coincidentally, only 1,428 days. Again, look how close that is. And it wasn't even a 2x. It was a paltry, weak 1.8x. Why is that important? We'll talk about this. Now let's go from the all-time low to all-time high. This is when nobody likes to buy. Very few like to buy. You guys like to buy because you've been here with me for so long and you understand why I'm talking about this. You don't make anything over here. You don't make everything when everything's going up into Valhalla to the moon. Just ask all the retail investors who bought gold at its all-time high and bought silver at its all-time high, which is around $120. What are they doing today? They're down, but what are they saying? It's going to go up, baby. It's got to keep buying. And they're actually probably right because the government does debase the currency. So they have a pretty good point. I actually appreciate the gold bugs and the silver bugs and all those guys because they're right. But looking again to when you actually make all the money, it's when everything is like right now, when everything's going in the toilet. So from all-time lows to the all-time highs, it gets even more condensed and more concise and more repetitious. From 2015 and 2017, it took 1,068 days. And if you would have bought the low in 2015 and sold at the high, which newsflash, you're probably not going to, or probably didn't, you're at 116x, 1,068 days. Then you went from 2018 to 2021 from the all-time low to all-time high. It took you 1,060 days. And you did 21x. And then you're over here in 2022, and you wait till 2025, and it took you how many days? 1,062 days. So 1,068, 60, and 62, it's an 8x. So again, I know that the bear markets are kind of frustrating because you're like, when are things going to move? I don't hear a lot of great news, or the news that I do hear, it doesn't correlate with the price action. Trust me, this is going to be my 17. This is going to be my fourth cycle. And it always seems to play out the same way. Now, will we get the returns? Obviously not. Obviously not. Look at these. These returns are way different over time. Diminishing returns are in effect. However, if you really think about it, not a bad market to be into, especially if you're diversified. So we have this all-time low to all-time high. Now let's get to the big one, which is where I base this price prediction, which again are worthless, but are entertaining. All-time high to all-time low. So again, look at these numbers. Look at these days. 2013 to 2015. It took 411 days, which was the longest. And you dropped 86%. So, I mean, again, depending on, where you went to, if you had bought at the all-time high, you did a 16x. If you bought an all-time low, you're at 116x. Wow, that's weird. 16x or 116x. Interesting. But you're down 86%. Now, in 2017 to 2018, all-time high to all-time low, it took about a year, 365 days. Pretty close, not really super close. And you're down 85%. Okay, interesting. And of course, now, or last cycle, you went from 2021 to 2022, and that was 366 days. Look at that tight time frame. 366, 365, 411. 411 is kind of the outlier at roughly 40 days or so. But what you notice is that the percentage drop from the all-time high is 86%, 85%, and 77%. But Rob, there wasn't as massive of returns in 2013 and 2017 and 2021. So why did it drop that much? Because it always drops that much. So as people are telling you hey, you know what? It's not going to drop that much because we didn't have a blow off top. We didn't see the type of returns. We didn't see the same type of returns in 2021. Again, an 8X, that's from the low. That's if you bought at the very bottom of the barrel and went in all in on November 9th, 2022. Guess what? Nobody did that. Or if you bought the top and then hit the top again, you only had a 1.8X. And before that, it was 3.4X or 21X. So why did they drop 77%? And of course, you can say, well, you know, there wasn't the current presidential administration that is behind us. There wasn't all the institutions. There wasn't the ETF. As I might remind everybody, and this is just me talking out loud, is I remember hearing when this ETF passed that it was going to follow gold, the gold ETF. And the gold ETF went up for roughly 6 to 7 years. And the reason why it kept going up was because of the stability of the institutions that were there, and they propped up everything and they allowed it to run for 7 years. Then, of course, that was in 2004. Then you had the Great Recession. And, you know, even though it was supposed to be a hedge, there was a problem with that as it came out of it. However, the same thing was said for Bitcoin, was it not? Institutions are here. Sovereign nations are here. We even have the government behind us. There's no way it's going to be like that. Maybe it drops like 10, 20%, but it's not. It's already dropped 50%. So what's another 50% drop? I don't see how it might not do that. And for that, I would say that we would drop 70%. Because maybe it wasn't a blow-off top, so I can see that. So let's just say 86 to 85, that's a 1% difference. 85 to 77 is a 7%. Let's say roughly 70%, a 7% drop from that. So that would put us, if the high was 125,895, actually, no, I'm sorry, that was the high. 70% drop is 37,800. Now, does that mean that I won't buy a penny or a 1 Satoshi of Bitcoin if it does not hit this 37,800? No, that's ridiculous. Why would I do that? This is just where I think things could go. So, having said that, here's what I'm looking at. Moving averages. We've talked about this many times. We're going to talk about it again. Every trader, Tom, Dick, and Harry, is talking about 200-week moving average. That's when I'm going to buy things. That's when I buy things. That's when I'm going to buy things. Might I remind you how many of these indicators fired off? None of them. None of them. So we can wait for this, and it sounds good. I'm not waiting. I'm buying a little bit. But just so you know, as of today, the 200-week simple moving average is 58,000. So that's a little bit higher than my 38,000, but I can see it. But what about a 250 or a 300-week where we've hit before? 51,000. How about a 350? Oh, look at that. Roughly 45,000. Have we ever hit that before? Absolutely, we have. Let's take a look. It was roughly right here on the low of 2022. 350-week moving average, 15,000. So if I'm wrong, which I hope I am, when we hit a 350-week moving average, oh, I take that back. Oh, that's 30 March. I'm sorry. I was like, wow, 21,000. I think I got that wrong. There we go. I'm at 45,000. So, all right, you got me by 7K. Sure, so enough. I think we could still see that somewhere in between there. So what do you do? This is all great. This is all great theory, but it doesn't really move the needle. I get it. Let's take a look at risk. So right now, the risk level is 0.31. If you like what you're seeing here, this is Ben's website. Links in the description. 10% off the first month. Go at it. Have fun. But when I take a look at these is, we did this thing called dynamic DCA, and I've been buying every Monday. I just bought. Today is mine. I just bought. But I'm thinking about, or I'm actually already did it, change some things. Because this is, for DCAing, you can do DCA an equal amount You can put $100 a week on a Monday. You can pick your starting date, so on and so forth. And if you would have invested in 2022, roughly April 20th, I don't know why that's there, but you would be up 72% as of today, and you would be up 232% if you would have sold the top. It's pretty good. That's the power of dollar cost averaging. But what if you do this thing called dynamic DCA, like we talked about? And let's say you did that, you accumulate up to these risk levels. And if you don't, this is kind of like a little bit, if you're just kind of new to this part, there's a link in the description where I talk about dynamic DCAing, but just stick with me. If you accumulate up to 0.6, then you just stop everything, that's fine. And what you can do is when it goes down the risk levels, so if it was at 0.6, which would be 146,000, I think it'd be kind of crazy. You would just buy at 0.6, wait till it goes below 0.6 and hit 0.59. Then you would think about buying more because the price is going down, which means it's not as risky. Again, right now, we're at 0.31. So if I would have done that back in the day in 2022, if I would have only accumulated up to 0.59 and exponentially increased my buys every Monday, which is what I'm doing right now, Monday, I would have had not 72% up, I'd be 172% up. You can see right there. And at the tippy top, I would have been up 419%. So I would have actually bought fewer days. I don't know. Let's see. How much did I invest in this one? 58,000. Wow. That makes sense. 19,600. I DCA'd a little bit more. But what if I did this? What if instead of accumulating up to this, I just picked up to 0.5? Well, guess what? Now, by doing less, I'm making more at 195%. Let me go back. If I did this up to 0.6, I'd only be up 172% today and 419% the all-time high. If I would have just said, nope, anything above 0.50, I'm not going to do anything, I would be up 195% and 464%. Now watch this. Let's say I'm like, nah, I'm just going to wait. And I'm only going to do in this one, 0.3, 230%, and 508% at the high. 230% just by waiting for these risk levels to go down. Let me go back. Wow, that's 195%. But if I just wait for the risks, I'm at 230% today and way higher at the all-time high. But what if I say, you know what? I'm just going to wait all the way, go to 0.29. Well, I do go up a little bit, 237% at 520, which is roughly the same. But what if I just say, you know what? No. I'm only waiting to back up the truck when we're at 0.1 to 0.9. You didn't really save much. You're up 1.46% than 240. And over here, you have 527. So look, that is my plan moving forward. Buy on Monday. Don't buy until I get into the 0. Or right below 0.4. Double, triple, quadruple up as it goes down. And I think I can extend my gains moving forward. That's it for today. So if you like today's video, give it a thumbs up, consider subscribing. We talk about it's time sensitive. Now let's get into a little Q&A, answer all your questions, and we'll go from there. Let's see. Oh, this is a good one. Latest Bloomer says, I smell some BS. Well, Bloomer, where's the BS? Tell me where I'm wrong here, and I will answer the question. Was I wrong in the 2013 to 2015, 2017 to 2021, 21 to 2022? Where was I at? And then also, as far as like dynamic DCAing, where was the incorrectness there? Just curious. Chris says, that's pretty much my strategy. Sup, Dan fan? Well, I mean, it's not, it's just math. And I can't really go beyond that. Like, that's what's great about crypto and investing, because you only just have to deal with, if you really want to just deal with this part of it, which is just numbers and math. And you can go from there, and you don't have to deal with the geopolitical stuff that's going on. You can take a look at the macroeconomics and take a look at those numbers and kind of integrate those into your investment plan. But what's great about it is we just look purely at numbers and where it goes. Am I going to hit 37,800? I don't know. Could, might not, might be close. But if we take a look at those risk levels as it goes down, and we take a look at these moving averages, it's a pretty reasonable plan moving forward. Unless, of course, everything goes to zero because of quantum computing, which I think is essentially Y2K. Again, let's see. What in the world is happening? I'm not sure. All right, Bloomer. So I'm just going to leave you up here and tell me what I did wrong. Where is the incorrectness? So Bloomer, you're telling me that you just put a comment in here because you just got in and didn't listen to the video? You're a thumbnail warrior. And I was hoping I would have left you guys behind during the bull market. Rewatch the video. Okay. Nobody banned Bloomer. Nobody gets banned here unless you're a bot or a scammer. Anybody has the right to say whatever they want. Let's see. I really don't see sub 50K, but who knows? Remember, I may not always be right, but I'm it's funny. Yeah. Meme says so many in the chat have no idea what Y2K is. So Y2K. So computer programmers and developers, to save time, data space, instead of putting out like a date of what they wanted to do to put in the program, instead of putting 1/16/2000, they just chopped off the last numbers, and with that you just have 20, or was it 19? It was the first of it. It was either the first two or the last two. I always forget getting behind, but probably the last two, I would think. Anyhow, so because they chopped those numbers, they said that everything would crash because it didn't say, it went from 1999 and then it didn't have the full 2000. It would just have 00. That's what it was. And because of that, it would just reset everything and all the computers would shut down, and then the electrical grid would stop, and then we'd have no water flow, and the emergency services couldn't do anything because the computers were out, and it was going to be like a big, huge catastrophe. And nothing really happened. So it's kind of like that, the quantum computing. Now, quantum computing will crack Bitcoin's code just based on the sheer amount of force that it can do. The problem is that it's not that it's so far ahead. It could happen in 2030, matter of fact. And from what the look that we saw, that means that we've got less than 4 years to really get everything under control. And that's not to say that we can't actually speed things up. But again, it comes down to physical qubits and logical qubits. And the physical qubits, of course, can be exponential. But if they don't have the logical qubits, the actual devices or the actual things that actually can use the computes and use the resources to actually crack the code, it doesn't matter. I did a poor example of explaining that, but watch the video. I believe it's in the Crypto Critical and why I think it's not going to be a big deal moving forward as long as we fix it. Well, Bloomberg says it. If anything is underrated, it's Cardano. That could be. We'll hope so. I got a big fat bag of that. I hope it actually works. Oh yeah, the biggest effect of Y2K was getting checks for 2019. I remember those days. Yeah. Young bros, we were unplugging our appliances during Y2K. That's right. We had to unplug the ovens and the microwaves because it would fry the servers. Yeah. Yeah, okay. First two numbers. Yeah. If it cracks Bitcoin, it'll crack all banking security. Yeah, we talked about it, and like individual accounts, probably not, because it's like a brute force attack, and you can try to brute force attack mnemonic phrases, private keys, all day long, and it'll take you forever. But you can do it and not get locked out. You can't brute force attack, say, like your personal bank account, because after like so many tries, it just locks you out, and then it just shuts everything down. However, for like the main master, access to like the Fed Reserve, apparently it can do that. I'm not for sure, but okay. So again, though, I just don't think it's, as long as we move forward, we should be okay. This one's good. Alert not orders, that's how you win price predictions. Very true. 38K. Chainlink is undervalued. Chainlink's always undervalued. Always undervalued. It's like something that I think it's the only oracle, well, not the only oracle. I know Solana has one too. But you would think that would actually, catch up. Yeah. Quantum will mine old wallets that haven't been quantum. And let's see. Any other questions today? Come on, Eeyore. Look, I've been bearish since essentially like 90K. So I don't know. But good news, though, is that we just mined the 20 millionth Bitcoin. Now we have like 113 years to mine the other million. There's the 4 million Bitcoin and old, yeah, AI guy is right. There's the 4 million Bitcoin and old tech, no seed phrase wallets. Those are hackable for sure. Satoshi's wallet, definitely so. Danny says, everyone's calling 38K. I was the only one. All right. If you need question, how's the pool doing? It's pretty good for a green screen. Yeah. See you in 100 years on a party. I don't know if my life can be extended that long unless AI does something miraculous. So we'll see. World Liberty Fi is like the US version of Justin Sun. I actually think Tron has way more utility. Before anybody says it. Let's take a look at what Visa has to say about Tron. And Visa says, this isn't me, this is Visa. Take a look at stablecoin transactions. All right. So stablecoin transaction volume by blockchain. And wow, look at that. Solana is doing the volume. 660 billion. Great. Good job for Solana holders. I'm one of them, so looking pretty good. Ethereum, 548 billion. And also congratulations on Ethereum for really dropping gas fees. I didn't think they could do it, and I stand corrected. And then Tron, number 3, is $260 billion. Wow. And then what about stablecoin transaction count? Oh, look at that. 70 million. This is just the count. 70 million, 45 million, Solana, 17, and Polygon. Did not have that on my bingo card. Look at that. And then down here, this is the big tell. there's really two stable coins that matter. I'll be honest with you. It's Tether and USDC right now, but who knows? Maybe Tether and USDC is like MySpace and Friendster of the social media age. I don't know. But that's the one that's the lion's share. And as far as like volume, it's Tron #1 on Tether, and USDC is Ethereum. #2 on Tether is Ethereum, and #2 on USDC is Solana. So Tron, I mean, say what you want about it. And Justin Sun, announcement for an announcement. They do a lot of volume. That's called utility. So it's not bad. Let's see. I don't know where the coin. And green is correct. Satoshi's wallets, they're a bunch of wallets, not just one giant one. That's true. These are just the ones that we think are his wallets. We're not 100% sure. Let's see. Look at that. Wow, that's right. Did oil peak at 119 now that it's 92? I don't know, but if you follow the show Landman, you should know that's not a great price. I saw someone shopping in Australia with ADA. Very nice. Want to know who that company is that's taking the ADA payments. Yes. Stay positive. And that's it for today. Stay positive. Lone Wolf to the right. That's it for today, everybody. So look, if you like today's video, which again was just for entertainment, not like it's going to definitely be a hard rule, but hopefully, you know, you take a look at that dynamic DCA and say, that could be not a bad thing. That's it for this one. So thanks so much for stopping by. I appreciate you guys. We'll see you on the next one. Thank you so much.